In a business, you need to know this info. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, one of the key times of year, because it's really important for all business owners to know this kind of stuff, is when the budget appears. Now, if you've never heard of the budget, or you don't know why it's important, we actually did a video on this previously, so check that out on the channel and I'll give you a few words of why it's really important. But in this particular video, I wanted to cover some of the key announcements that were made. Now, there's a lot of detail in this. There was quite a lot of announcements, and as a result, we're going to be chopping those up into some more detailed videos to talk about how those particular things are going to apply to you and how the detail works. But in this video, I want to try and keep it as kind of top level as I can, otherwise we'd be sitting here for an hour talking in detail. So these are the kind of need to know. And of course, with everything we do on the channel, it's more from a business owner perspective. So I'm going to concentrate on those. I'm not going to talk too much about stamp duty and things like that. It's going to be just all the need to know stuff. So that's it. So before we get into it, if you like these type of videos, make sure to click the subscribe button below so you get notified whenever we release another one just like it. So the Chancellor stood up and laid out his plans for the country's finances over the coming few years, and in fact went quite far into the future, as we're going to find out. So looking at some of the key announcements, the first one I want to start off with is for you, all you self-employed people out there, and that's the Self-Employed Income Support Scheme, or quite often people just refer to it as self-employed grants. Now, they did say there would be a fourth grant coming, and they're true to their word. There is. In line, it's roughly kind of tracked what they do with furlough. So at the moment, the fourth grant is going to be 80%. So they've said, yeah, cool, we are going to give you that grant of 80%. Currently, you can apply late April. We don't know any more than that at this stage. And I would say we are recording this video straight off the back of the announcement, so there's very little detail with some of these things that are out there at the moment. But we have got this grant that is available late April for you. And it's the same rules. So if you don't know and you haven't heard of this scheme, check out the previous videos on our website on the Self-Employed Income Support Scheme, and all the criteria is the same. However, there's one big change that's fairly exciting for a lot of people who potentially were excluded before, and that's that they're going to take into account, providing you've submitted your tax return on time, and by on time, they actually meant this time round before the actual announcement. So as long as you've done it by midnight on the 2nd of March, you could apply for this and they would take it into account. And they will take into account your 1920 tax return. Previously, it had gone right the way back to 1819, and they sort of averaged it over 3 years. This time they're bringing it forward. So that's pretty exciting. It can mean that actually, though, you might get less money. If you've had a bit of a downturn in profits, they're going to average it over a 4-year period now. Could end up being a downturn. I don't want to go too much into it in this video, but there is that fourth grant, and it's worth knowing that it could change. And as always, this is be something that you'll be invited to apply for from HMRC direct on their website, and they will tell you whether they think you're eligible. So keep an eye out for those emails. There will also be a fifth grant, which was pretty surprising. And again, they're looking at what periods that might cover and the value. And what they're saying is that they're actually going to take a two-tiered approach to this. It's either going to be 80% or it's going to be 30%, depending on whether your turnover between April and April, so April 20, so basically your turnover during the last year of lockdowns has dropped. If it's dropped by more than 30%, they're going to give you the 80% grant. If it hasn't, you get 30%. Doesn't seem particularly progressive, does it? It's not exactly staggered, it's one or the other, but that's where we are, and again, we'll await further details. But from a good point of view, you are getting a grant. It just depends on how much and whether you qualify. So more detail for sure on that as it comes. Now, of course, that's self-employed people. What about employed people? Well, again, as a business owners, we're not too worried necessarily about furlough and things like that, because a lot of the time that applies to people who are in employment, but it does apply to you and your team. And potentially, if you're in one of those affected industries where you're literally shut down right now, you might well be claiming it as a director of a limited company. So it's still important. That's been extended to September. So great news from that front, especially if you're in one of these industries that hasn't even reopened yet. I think that's really cool. It's still currently costing you employers' national insurance and pension to have people on furlough, so it's not particularly free, plus any other cost you've got in terms of actually getting those claims done. So that's still going to continue. But it does start to get worse from the 1st of July. So you'll be asked to contribute 10% to, so you imagine you're an employee, or you as the director gets 80%, you're going to be asked to contribute 10%, and the government will do 70, and then it then goes to 20 and 60. The government will do 60. So it does get progressively worse from July. So just bear that in mind. It might be worth time to review whether those jobs are going to last. And again, you're usually comparing it against what's the actual cost of re-recruiting people later if I need them, otherwise it's quite a good thing to kind of hang on to people where you can. So that's good news. Furlough has been extended. Not good news if you've got a team full of payroll people that really don't like the stress that furlough causes. But a lot of payroll people out there probably not as excited as everyone else, but that is something that's there. Now onto some bad news, I guess, is probably the easiest way to say it. And that's, if I was going to summarise it, I would say your limited company is likely to pay more tax from April 23. So you think that's a few years away now, but what they have done is they've said, we're going to change the corporation tax rate. So that's the rate, effectively of like limited company tax. And it's going to go from what it is now at 19% to 25%. Now that sounds drastic, but actually when you dig into the detail, it's not as bad as it seems. The first 50k of profits is going to stay at 19%. So for a lot of small companies, that's there. Now it's interesting, I don't know why they picked 50k particularly. I suspect it might have some political bearing in terms of there are a ton of people, if you ever look at the hashtag sort of excluded UK, there are a lot of people that have had no support. And I think that they would have been particularly vocal about this change if that had been the case, that it affected everybody. So under 50k, you've got to stay the same at 19%. Over 50k, it starts to get worse, but it doesn't immediately jump to 25%. What happens is you actually get like a staggered effect up to 250,000. So it's only at 250,000 profit and above that you're actually going to pay this new 25%. So it's not as bad, but ultimately it's going to be a rise if you're doing over 50k profits, which is something you've got to factor into maybe your pricing in a few years' time. I think the one benefit of it is the time scale. You've got a couple of years to kind of sort this out and check that you're in a good place before doing it. So I think I like the kind of the length of time that we've got to deal with this. So that is kind of a bit of bad news. I don't think there's any other way of saying that. I don't think there's any great news out of that. The one good piece of news, they're introducing something called a super deduction. Crazy cool name, right? But super deduction. And how it's going to work, it's going to work a little bit on the detail we've got right now, like it does for something like when you buy a big bit of equipment. Let's say you bought a forklift, or even, let's just use a simple example, let's say you bought a computer or even a van. Currently you get these things called capital allowances. And normally, if they qualify for what's called annual investment allowance, you get to say, okay, you can deduct 100% of that cost from your profits before you get taxed, which actually makes sense, because if you think about it, you've normally parted with the cash in that year, so it kind of works that you should get 100% deduction. But without those rules, that wouldn't happen. So what's happening now is they're saying, actually, not only will we give you, so let's say you bought a computer for £1,000, so you're normally able to knock off £1,000 from your profits before you were taxed. They're going to say, we're going to let you knock off 130%. So in theory, you're now going to be able to treat that computer as almost being £1,300 when you come to calculate your tax bill. So it's really quite good. How it's going to play out in the long term, I don't really know, but I think it's a great relief. I mean, anything that's going to give you more tax relief is obviously going to be welcome from business owners. So if you are investing and growing and things like that on equipment, that's going to offset some of this corporation tax rise. So that's there for you, the super deduction. It should be said as well, there's also some other thing with company tax, and again, it's not particularly exciting for many of you, but if you have made losses in this year and you've made profits in previous years, they've allowed you to do cooler stuff with the losses and bring it back a bit further. So that could actually cause you to get a tax repayment. So if you have made losses in this year and you've made profits in previous years, do chat to your accountant about it, because there might be something doing there. So keep your eye on that one. Now, one piece of good news, depending how you look at it, is they've said that that the Chancellor has frozen the rates of tax now until April 2026. So it's quite a long period of time. So at the minute, you pay higher rate tax at the time we're recording this, when you go over £50,000. In the new year, so from April 21, it's going to be £50,270, and you're allowed to earn £12,570 tax-free in the new year. And those rates are staying, so they're not going anywhere, they're going to be fixed. Now, that's great news from a kind of, I don't know, like a consistency point of view. At least you know that it's not going to come down, they're not going to play around with income tax rates and things like that, so you're not going to be paying any more tax in that period. Where some people will spin it as a stealth tax is obviously the price of things goes up with inflation, and obviously we're not raising up with there, but I do think we generally have quite a generous tax rates and tax allowances here, so I don't think it's particularly bad news, and I actually prefer the consistency of it. I think knowing where you are, especially as a business owner and you want to make business decisions, at least you can plan for that. So that is something. So you're not going to pay any more income tax for that period, which I think is solid news. Now, if you're in some of these more affected sectors, let's talk about that. So if you're in hospitality and those kind of forced to close areas, there's a couple of things happening. Firstly, at the minute, you will be enjoying, although whether you can actually sell anything with it at the moment, you'll be enjoying a 5% VAT rate on things like meals that you're providing in a restaurant. If you're a campsite, those kind of things have only got a 5% VAT rate on it, which is great. They're actually extending that now to at least September, and then it's going to stagger. They're going to do this weird rate where they're going to do 12.5% later, and then eventually return in a year's time, in around April next year, back to kind of 20%. So they've given you quite a runway to sort of get back on your feet and enjoy that extra bit of income for your business. So that's great news. And then if you have got premises, they're going to announce this, or at least they haven't announced the full detail of it yet, but they're calling it Restart Grants, and it's linked to your premises. So in the speech he said, okay, if you're non-essential retail, you're going to be opening up before, say, gyms and the like, we're going to give you up to 6,000 in the grant to help you. And if your gyms and those businesses that are later down the line on the reopen, we're going to give you 18,000. Looking at how they've done that previously, they're probably going to be tiered based on the kind of the premises you've got, how much business rates you're paying. But that is great news to know that there are more of these rates coming. And actually, what I've seen from these rates grants, working with businesses in this sector, is actually, for a lot of them, it really has been a good income replacement in a lot of cases. I mean, obviously it depends on how much you were selling through that particular premises, but for a lot of small businesses, actually they've been really well received. So I'm sure these grants will be well received as well. So keep an eye on your local council for that, because it's all done through them in exactly the same way as the other grants. And these are on top of all the other things we've got at the moment, like local restrictions, grants, and these things. So they're the place. Keep an eye on your local council. And of course, the other reason to keep an eye on your local council is they've still got a business rate holiday. So if you're in those sectors, currently you're not really paying any business rates, and they're going to continue to extend that up to at least another 3 months. And then once the recovery is in, I think they're then going to carry on a discounted rate until next April. So just keep an eye on that and more details as it comes. And then a couple of final points that are slightly less exciting. One's about staffing. So if you have got a team, you've got to know that the minimum wages and the national living wage are going up. So the living wage is going to be £8.91. Now, if you've got people on that, always with employers, I don't think employers ever like to have the rates continually bumped up, but nearly every April it happens. So it's there, you've got to deal with it. So do review your pay rates and your pricing to make sure that that all works. And also from a good news perspective, if you hire apprentices, currently there's this thing called employer incentive payments for apprentices. And I think we've done another video on this previously, and I'm sure we'll do another one. But you get a payment for hiring apprentices. What the Chancellor said in his speech, and at the time of recording there's next to no detail on this, is they're going to double that incentive payment. So for hiring apprentices, they're going to give you £3,000, which is going to be interesting. If it's similar to the other one, there's a bit of paperwork to do behind the scenes to kind of apply for this, and it's normally paid out in a couple of chunks, but knowing that's there is going to be great. And he did say particularly that it's going to apply to all ages, where before this grant was staggered, so it'd be interesting to see the detail when that comes out, but that's a good bit of news. And then finally, we have a loan scheme, a new loan scheme. Now don't get excited, it's not a bounce back loan type scheme. It's actually very similar to how the loans were at the beginning of the lockdown, where they're backed by the government by 80%. So obviously encouraging the banks to lend them out. They've got no personal guarantees attached to them, so you don't have to kind of stand for the loan up to about 250 grand. So that's good news. But you do have to jump through certain hoops. This is like a proper commercial loan, looking at the detail at the moment we have. So you're going to have to prove that your business was viable were it not for the lockdown, which is quite important. Whereas bounce back loans were like, here's all your money. These aren't like that. They're proper loans. But that is good if you need some extension to your current finance. And the way I picture those, I think for kind of slightly bigger businesses, they will be an option. I think if you're looking to refinance your loans and maybe look at how you can manage this period through the transition. So do check those out if that's for you. And again, they're all going to be done by banks, so it's your banks you need to speak to. And I believe that is about it. There were some things in there that affect things like the stamp duty holidays and other things that are positive measures, 95% mortgages and all these things. But from a business owner perspective, these are the key highlights. And as I say, we're going to be breaking them down in even more depth over the coming weeks as more detail emerges. If you've got any particular questions on it, drop them in the comments and we'll do our best to come back and answer those for you. And also, if just let us know what you felt about the budget, if you watched it and you've had time to digest it. If you're a business owner, do you think it was a good thing? I'll be interested to see the kind of opinion on this. So until the next one, have a great one.